Let's start with the price action, and then we can turn to the estimates. The price action, negative. It continues on the S&P 500. We're down across the board, down by more than 1 full percentage point on the S&P. On the Nasdaq, down by 1.6. On the Russell, the small caps, down by 1.9. In the bond market, the rally continues for a 7th consecutive session. Yields lower over that period by more than 30 basis points on a 10-year maturity. The 2-year dropped 50 in the month of July alone. That move continues. Yields lower at the front end by 3 basis points, 4.12 on 10 to break of 4% in the last 24 hours. Your 10-year, 3.94. I promise you the estimates, so here they are. Going into payrolls, just around the corner. 175 is the median estimate in our survey. On unemployment, 4.1%. The question, particularly after the weakness of yesterday, ISM manufacturing, jobless claims, is this a head fake or the real deal? With us around the table, the real deal, Mohamed El-Erian of Queen's College, Cambridge, with us for the next 2 hours. Alongside Annmarie, I'm Jonathan Ferro. Mohamed, we've got to go to you first. Head fake or the real deal? What is this?
I think the US economy is slowing faster and in a broader sense than most people anticipated, including the Fed. And I think that the market is catching up to that possibility, which has become a probability.
So I've said repeatedly, I've asked repeatedly, welcome cooling or unwelcome deterioration. Is this starting to sound more like the latter than the former?
It is the latter. There's no need for us to have an excessive slowing in the economy. This remains quite a robust economy, and if we do get it, it is because the Fed was late in recognizing that the economy is slowing.
Now there's a debate if the Fed needs to cut deeper when they go in September. Do you think that they should, in September, go to 50 basis points instead of 25?
I think if they go to, I'm laughing because so many people now are starting to say 50 basis points. To start with a 50 basis points cut means we've made a policy mistake. And this is the Fed that surprised a lot of people by having to hike 4 times in a row by 75 basis points. So they were late starting, and if they cut by 50, they will signal that they're late starting to cut. I think it would be a mistake to cut by 50, but the fact that some people are talking about it, I think, is where the information content is right now.
We've got lots of time with you this morning. You'll be with us through the 7 o'clock hour into the 8 o'clock. We'll go through the jobs number together. I just want to sit on what I think has been the biggest piece of your call, which is listen to corporate America. It worked the first time. It seems to be working the second time. What did you make of the tone of that news conference with Chairman Powell early this week, where he appeared to dismiss any evidence, any signs of weakness?
So I think he was trying to strike that delicate balance, first explaining why it is they didn't cut, but signaling that they're likely to cut. And he on the whole, actually, he struck it quite well. He did come across more dovish than the statement, and you saw the market react in that way yet again, and that is his habit of coming across more dovish. But I understand, you know, it's not like the Bank of England. The Bank of England is very clear. 5 people voted for, 4 people voted against.
Yeah.
You know it's very... He responded by saying, oh, no, it's really good that everybody votes the same way. Actually, it's not good that everybody votes the same way because you don't get a sense of how difficult this judgment call is.
I wonder if we get a sense of that in these speeches over the next few weeks from Fed officials.